Tesla had another massive day today, up over 6%. We hit $214. As you guys know, 220 was our target. And for those of you who have been following me for the past couple of weeks, I did close out my December $260 calls on Tesla. I'm going to explain why I closed it out. I still think that Tesla's going to see 300 by the end of the year, but I want to talk about some resistance levels coming up. We're also going to talk about if I think Tesla is going to reject within this market bias, because this is normally a very strong area of support and resistance. Now, the first thing you guys know is that over the past week, we have been bullish on Tesla, because if we look at market structure by taking a Fibonacci from swing low down here at 170, up to swing high, and we pull it out. Now, a lot of people actually ask about my Fibonacci. So my Fibonacci is just set with 0.618, which I label here golden pocket, 0.786, which I label golden pocket. And then this one, which is OTE or optimal trade entry, that is the 0.826. And we know that this golden pocket level is usually going to be a strong area of institutional buying, meaning that Wall Street and hedge funds, the people who can actually move the market, are normally going to buy there. And we know that this area between the golden pocket and the optimal trade entry is the most ideal time to start a long-term position, which is why price bounced right off of that level. The reason that we've been bullish basically since the bounce off that smart money level has been because of the BX trender. Now, when we're looking at a stock, we want to know three things. We want to look at what is the overall trend, which in this case, you can see the market structure, and the trend is bullish. The daily is underneath of this market bias, which is something we're going to talk about in a minute that's not ideal, but still structure is bullish because we held this zone. The next thing we have to look at is what is the mode? Are we in a compression mode, which is what we're seeing right now, or are we in an expansion mode, which is what we saw back here? And the third thing we want to know is there bullish or bearish accumulation? Now, in this case, we are in a bullish trend with bullish structure. However, we are in a compression mode as price has pulled back. And now, even though we're pushing up, we're still compressing and consolidating here. Now, as far as bullish accumulation, is there actually big money coming in to purchase this and move the stock? Well, yes, there has been, because you can see that over the past 7 sessions, we are making higher lows and now higher highs with the BX trender. This is showing that money is coming into this. So in most cases, price will bounce off of this level and move its way back up into this market bias indicator. If you want to learn all the settings to the indicator and this exact strategy, where to set your entries, where to take your profits, how to set stop losses and position sizing, it's all in a course completely for free. The link to it will be in the description. This market bias will normally act as a resistance, and that's why we are saying that our price target this week was $214 to $220. And even yesterday, when price pulled back, we were noting that we were still making higher highs on the BX trender, which means that there's bullish accumulation. Now, at this point, there's a lot of things happening here. We still have a gap all the way back here from about 248 down to 240, which I think will be filled later on. I'm expecting a rejection off of this market bias with maybe highs of 224, and I do think we will get one more pullback to test $200, maybe 196 before the bounce, and filling the gap back up to 248 and maybe even $300. Now, does this rejection on market bias have to happen? Of course not. But the way that I see this is that if I can cover my long position here and price rejects, then great. I missed out on a ton of losses that I didn't have to take in the short term. However, if price pushes back over the market bias, holds support, I can just go long back up at 228 once I have confirmation on the weekly market bias that we're making higher lows, and I can still ride price all the way back up to 240, 260, and $300, which is where we think we'll be by the end of the year. So while I might miss out on some short-term profits, I'd rather just de-risk the account and de-risk that position. Now, in the meantime, I can just sit out, or I can start selling cash secured puts each and every single day down to 200 and 196, which would get me some sort of premium and some return on my money as we're sitting between this level until we get the full confirmation of the run back up. Guys, let me know what you think. If you want to learn my two-step trading system, all of our courses are completely free. The link is in the description. It is very simple. It requires 30 minutes per day right before the market closes, so about 3:30 to 4 p.m. And if you want to trade with me every single day and our community, go ahead and check out our private mentorship group. The link is in the description. I'll see you guys next time.